How's it going, everyone? It's Sam. I wanted to show you part of an interview here by Michael Saylor, just the best parts of this interview. It's actually an hour and 40 minutes long. It was a really good interview with Natalie Burnell, and it's an hour and 40 minutes long. I realize some people don't have that amount of time, so we're going to condense it to about 25 minutes or so. And I would actually suggest if you're watching this and you can deal with the extra speed, I would put it a little bit fast because Michael Saylor actually talks a little bit slowly. So you can hit I believe it's three dots on mobile or the little gear icon to speed it up to 1.25 or up to 2x speed. But he talks about some really interesting things from how to get rich in assets or in Bitcoin, some of the tax benefits and some of the implications behind Bitcoin and why Bitcoin's going to be a lot harder to tax than something like property or like companies. So it might be a good thing for you to add onto as eventually one day the US will have to make up for their giant losses every year. And he talks about why he isn't worried about the price of Bitcoin and what it will take for larger companies to start buying Bitcoin and the issue that they're running into now. So again, I'll put timestamps down below too so you can skip around. Hopefully this makes it as easy as possible for you guys. Thank you. If you want to help out, just hit the like button. I really appreciate that. Natalie, great job on your video too. Also, if you guys want, there is a link down there to BlockFi. So he actually talks about BlockFi, or he just mentions it. So if you guys want to get an interest rate on your crypto, you can check out the link below the video. You can also check out a link to get on the waitlist for their credit card. So they give you Bitcoin back, no annual fee, all that good stuff. So definitely check that out down below too. Thank you guys, and let's get into it here.
And I think Peter Schiff tweeted just last week or so that a lot of people are buying Bitcoin to get rich. People buy gold to stay rich. People are buying Bitcoin to get rich, which is essentially why he thinks they'll be poor. So what are your thoughts on that?
I think you have a much better chance of getting rich buying Bitcoin than buying gold. I think that if you want to get rich, then you want to find some big tech dominant digital network that everybody needs, nobody understands, and nobody can stop. So who are the rich people in the world? Steve Jobs got rich on Apple. Bill Gates got rich on Microsoft, right? Mark Zuckerberg got rich on Facebook. Jeff Bezos got rich on Amazon. Larry Page and Sergey Brin got rich on Google. What's their criteria? They all created a digital network that's dominant, that everybody needs, that nobody could stop, that nobody understood when they bought the stock. And then they didn't sell it. If Jeff Bezos had sold Amazon stock when it traded down 80%, and it did that 5 times, it traded down 95% once. If he had sold it, if he hadn't had, had the courage to hold the thing when digital retail traded down 95%, if he hadn't held it, he wouldn't be the richest person in the world right now. Steve Ballmer is worth $100 billion. What did he do? Didn't sell. What was the brilliant thing that Steve Ballmer did in order to be worth 100 billion? He didn't sell Microsoft. Okay, so what do they have in common? They're all big tech. If you have a big tech network and you can put hundreds of thousands of businesses on it, or tens of millions or hundreds of millions of people on it, and you can replace something in the physical world in the 20th or the 19th century economy, then you've affected a digital transformation of the civilization. The problem with gold is you're not doing a digital transformation of the civilization. It's a 5,000-year-old idea. It stopped working in 1914. So if you want a good digital transformation idea, Twitter, Facebook, Google, Square, Bumble, Tinder, Uber, Airbnb, it's Instagram. It's not complicated. We've got 100 examples in front of us. The digital transformation of blank. Bitcoin is the digital transformation of property. Gold is not. You want to get rich, your only hope is to find either to create an asset that is going to appreciate by a factor of 100, or to buy an asset that is going to appreciate by a factor of 100. The only assets that will appreciate by a factor of 100 or 1,000 are, by definition, assets that 99% of the population doesn't appreciate or understand.
Mhm.
If,
Well,
if you go down the street and you ask 100 people, do you think Apple is a valuable company? You're going to find that 50 of them agree with you. If you had asked the question 20 years ago, do you think Apple will become a $1 trillion company? The answer is no. I mean, at one point in time, Michael Dell said to Steve Jobs, back in 1997 or so, you should give the money back to the shareholders and shut the company down. If you went back to 2007, when they roll out the iPhone, everybody didn't agree with them. Okay, well, maybe it wasn't going to work. By 2009, you could see it was going to work. By 2010 or 11, it was pretty obvious. By 2012, 4-year-old kids wanted an iPhone for Christmas. So in 2012, 9 years ago, 4-year-old kids wanted an iPhone. And if you gave the girl an obsolete eBayed 2 generation back iPhone for her birthday, she throws a temper tantrum because nobody wanted the old iPhone. They wanted the new pink iPhone, whatever. So you had that observation, and yet still 98% of the world didn't quite get it. You could have made some money. If you want to get rich, you're going to have to actually buy something that the majority of the uneducated public doesn't agree with you on and doesn't understand. When you do that, you're going to have to have studied enough so that you have conviction that you're right and not they're right. If you've studied something for 1,000 hours and they've studied something for 1 hour and they think it's garbage and you think it's good, then you can reasonably assume that's a chance for you to make a wise investment that'll make you money. If you've studied it for 1 hour and they've studied it for 1 hour, now you're just going to be in a coin flip. You don't know. You're going to be easily swayed. So I think in general, Bitcoin meets the criteria. It's something that is a big tech network that is underappreciated, that has massive upside potential because of the technology and because it's a solution to everybody's problem on the planet. Gold and silver are not the solution. There are plenty of other digital solutions from Amazon, Apple, Facebook, Google, but they're already mature and they're probably not bad investments if you're looking to get a 10% return or 15% return. But I don't think you're going to get the outside returns from those things because 2 billion people already understand what they are by now. And so you're not going to be first. So what would you like? You would like to have a big tech network that has like all the dominance of Apple or Google or Facebook, but without the company attached. So Bitcoin is big tech, but without the company. What you're getting is just the pure big tech network. No CEO, no board of directors, no product, no iPhone. There's no employees, so there's no one to unionize. You don't need an iPhone 12 to be competitive because the product of Bitcoin is just a Bitcoin. But you can see that one iPhone 3 today is worth nothing.
Mm-hmm. Yeah.
And one iPhone 12 in 100 years will be worth nothing. So the product that Apple is selling isn't going to last 1,000 years. The product that Bitcoin is selling is 1/21 millionth of all the money in the world. That doesn't have to change. It just kind of has to not break. So what I liked about Bitcoin was it was a digital gold or a digital property that you couldn't inflate. And it was on a big tech network that you could accelerate using computer technology. So call it digital gold without all the imperfections of gold. But the big tech element meant that you could plug layer 2 and layer 3 applications into it, like Square Cash, Lightning, Apple Pay, Google Pay. And if I plug applications into the Bitcoin network, then I can create smarter, faster, stronger gold, smarter, faster, stronger property. And pretty much the core principle of how you get rich or how you stay rich in the 21st century is you dematerialize something from the physical world to the digital world, and you make it smarter, faster, and stronger. If you digitize music, you create Amazon and Apple Music or Pandora, it's smarter, faster, stronger, and you give it to billions of people. And if you dematerialize CDs and DVDs and or dematerialize concerts and Broadway shows, and you have YouTube. And if you dematerialize every library and every book and every university on the planet, you have YouTube and iBooks. And so the digital transformation of information and entertainment is how you provide joy and education to the world. Ergo, the digital transformation of property is how you provide wealth to the world. It's a very simple idea. It's not only Bitcoin, it's all the applications on top of Bitcoin, of which you've got PayPal and Coinbase and Binance and Square, but you have the BlockFi credit card.
You can't just keep printing money the way that we are, the quantitative easing and the fractional reserve banking. And we're at this point with the reverse repo and just historic highs for the NASDAQ and the S&P. Do you expect there to be some historic crash? Because some people are expecting that.
I think the way this will go is the bankers in the Western world will continue to inflate the money supply until they get to a point where they can't anymore. And they will pay for all the deficits with inflation until they can't. And at the point that they can't, they'll switch to taxation. And the taxation will come progressively in the form of income taxes. And then the third phase, it'll come in the form of property taxes. They won't be able to raise enough money with income tax, so it'll become a property tax. And before you recoil in horror, just keep in mind in Florida, there is no income tax, but there is a property tax, and it's 2% a year on all of your real estate property. Maybe they'll assess the property up and it becomes 2% of property that's worth 50% more, and they raise their taxes 50%. Or maybe they'll extend it from just your residential real estate to commercial real estate to other forms of property. I think it'll be a political process. There'll be a lot of back and forth negotiation. Each state will do it differently. Each city will do it differently. Each country will do it differently. Each administration will do it differently. But eventually, they'll start taxing things more. Maybe they'll say 2% of all your stocks, 2% of all your crypto, 2% of all your everything. I don't know. What I do know is that Bitcoin is the best property to hold when that time comes. If you hold a building in California, you won't be able to move it to Wyoming, but you will be able to move the Bitcoin from California to Wyoming. And if you have a building in the middle of Manhattan, it'll be hard to hide it. Everybody will walk past it and they'll say, there's a rich person with a building, let's go ahead and tax that more. But if you have Bitcoin, people won't walk past you saying, wow, that person's got a lot of money, because they won't be seeing it. Yeah. If I do pass a law, maybe if I jack the tax rate to 2, 3, 4% a year on land or a building or a company stock, you can't move the headquarters of Apple Computer to Monaco. You can't move the Rockefeller Center to Monaco. And you can't move the land underneath the Rockefeller Center to Monaco. But you can move $1 billion of Bitcoin to Monaco. So the Apple headquarters it's a beautiful piece of property, but it doesn't count as a fungible piece of property. A very rich corporation in Beijing is never going to buy the Apple headquarters when they have to sell it or they have to move it. So as we look forward, there'll be inflation, and you want to own property to protect yourself from inflation. Compared to California taxing of buildings in California, if I tax 5% of the real estate property in California, I'm going to get it all.
Mm-hmm.
If I tax 5% of the companies in California, I'm going to get that too. If I tax 5% of the Bitcoin in California, it's all going to move.
Yeah.
And so if you're making a law in California about what to tax, what's the point in taxing something that's going to move away from you when you tax it? And so that's my way of saying, if it's the apex property, people aren't going to try to tax it as hard because it's hard to tax and they won't be successful. And so if you're not going to be successful, then there are fewer people attempting to target you as the victim. And let's say in the worst case, Nat, like how are you going to tax Bitcoin in the US? You can't tax it at the LA level. You can't tax it at the California level. You have to tax it at the federal level. So I can tax it at the federal level, and then people will move out of the country. And then you say, well, that's okay. If you're a citizen, you still got to pay it. Well, then I sell it to a non-citizen. See, then the question is someone that's not a US citizen going to want to own this?
Mm-hmm.
And can I transfer it to them? They're not going to want to own your company in Chicago. They're not going to want to own your house on Lakeshore Drive. They're not going to want to own your ranch in Kansas. They're not going to want to own the building in New York, but they will want to own the Bitcoin. And so what you've got is this regulatory arbitrage where there'll always be somewhere in the world where they're going to want this thing, and that somewhere will be the highest bidder. And so when California, let's play this thought experiment out. If the governor of California were to levy a 50% a year property tax on a building in California, what do you think the price of buildings in California would do?
Decrease. Everyone would leave.
Let's make it simple. Let's just tax them 100%. Okay, so you have $1 billion worth of real estate property in California. What's it worth after I tax it 100%? Nothing, right? That's called expropriation. Does it happen? Yes, it does happen. It's a socialist and communist thing when it happens. It happened in Venezuela to the oil company. It happened in Argentina. It does happen. Could it happen in the US? Yeah, sure it could. So when the politicians expropriate some portion of your property, what's a rich person in Monaco going to pay you for that? That's the question you ask yourself. And the answer is they're not going to pay you anything. They're not going to want to. When I tax your building in California 10% a year, it's going to be worth like 1/5 of what it was the day before I tax it. Will you be able to sell that to a rich person in Monaco? Probably not. But if you could, you sell it at 20% of what it was worth yesterday. But when I tax your Bitcoin at 20% a year, the day before that tax goes into play, you're going to sell it to someone who's the high bidder in the world, and they're going to pay you the pre-tax level. So if you're looking to protect your wealth, right, the way to protect your wealth is with a universally desirable scarce asset, which is portable and fungible.
Do you feel a pressure? I mean, I know that you bought many coins when it was at the 50 range and now it fell, you bought more. But do you ever feel like you're going to fall on the sword if Bitcoin were to fail?
No. Like I feel that Bitcoin is like fire or electricity. I think it's just a matter of time. I think it took the human race 100,000 years to figure out fire. So like that was a slow thing. I think it took the human race 20 years to figure out electricity, or 30 years. I don't think Bitcoin will take 30 years. I think information's spreading faster, but maybe it takes another decade.
So, what will it take to get other big corporations like the Googles and the Apples and the Facebooks into Bitcoin? Do you just expect it's a matter of time, or what's needed to make it happen?
I think on the operational P&L side, I think they'll build Bitcoin into the Google Pay, Apple Pay, into Facebook because they need to do that to compete with PayPal and Square Cash. That'll happen naturally because of the tech imperative. And I think they'll do that because that's in their best interest to do that. I think on the balance sheet side, the most important thing would be the accounting treatment. Right now, accounting isn't kept up with the rate of technology advance. And most of the rules of surrounding accounting for digital assets were put in place before any public companies owned any. A year ago, you couldn't find any public companies that owned $10 million worth of digital assets. And now you have billions of dollars held in public companies. The current accounting treatment is to treat digital assets as an indefinite intangible. An indefinite intangible would be, you could characterize it as the most conservative accounting treatment you could apply to any property or any asset. If you were to apply indefinite intangible accounting treatment to your apartment, that would mean that you start by booking it at the price you paid for it. And then on Saturday night, when you're out at a party, you go to every single person, even the drunk ones, and you ask them if they'll buy your apartment from you. And if they say yes, you ask them what they'll pay for it. And if they say, I'll give you $100, then you have to write down $100. That's the price for the apartment. You go back and you account for your apartment as $100 and you write it down to $100 and you take that as an operating loss for the period. And you say, looks like I lost all that money on my apartment. And then later on, if the rest of the world thinks it's really worth $10 million, you still carry it on your books at $100 because once upon a time, the market value of the apartment was $100. So you see, it's a prejudicial accounting treatment. And the fair value would diverge radically from the gap or the book value. And that creates an opacity situation where, if I'm looking at your P&L, it looks like you have $100, but you own a $10 million apartment outright. And now I say, well, it looks like you're poor, Natalie. I'm not going to invest in you. And you're like, well, why, let me explain. And so then you start explaining and then I get distracted and I go talk to the next person. So it's very complicated to explain your balance sheet and your P&L when you have indefinite intangible accounting treatment. So if you're a conservative CFO at Google or Facebook, you're going to look at this and you're going to say, I just spent 20 years creating a optically beautiful P&L and a beautiful balance sheet. And if I put this asset on my balance sheet and if there's volatility and it trades down, then I'm going to have to take these big write-offs and I'm going to have to explain it to the shareholders. And I don't want to have to explain anything. So I think the short is accounting is probably one of the single biggest drivers that if that is ever placed at parity with other securities, like if they give it accounting that's similar to the way an ETF or a stock or another asset is accounted for on a public company balance sheet, that would remove a big hurdle for a lot of treasurers and CFOs.